Welcome back. Here's a look at shares of Nvidia. They have been down slightly today, down just by about 1/3 of a percentage point, as the market awaits for the company's first quarter earnings being released after the close of trading today. We'll have those numbers for you here on BNN Bloomberg shortly after 4 p.m. Eastern Time, as soon as they are released. The stock, as you can see, is still below its summer highs, but has rallied in a big way since the latter portion of April. Let's bring in a professional investor who owns the stock on behalf of clients, Liz Miller, president of Summit Financial Advisors. Liz, thanks a lot for joining us. What will you be watching for from Nvidia today? It is expected to report some very high double-digit gains in profit and revenue again.
Yes, and it's very hard to think, what can Nvidia do to surprise investors? The bar keeps going higher and they meet the bar. Of course, the stock is well off its high north of 150 last summer. Today, the focus is going to be any comments on upcoming chips, Blackwell Ultra, the newest one, Rubin, that was announced for 2026, and really a focus on supply chain issues. What are they thinking about? What are they doing to try to salvage some of this business in China? So the numbers will be one thing, but a lot of the anecdotal guidance is going to be even more important in how the market reacts. The market really looks to Nvidia to define for us where AI stands and where it's going.
Nvidia expected to report profit in the first quarter of $19 billion. That would be up 31%, and revenue of $43 billion, US, of course. That would be up 66%. How much of a headwind, Liz, are the issues with China? And those issues are restrictions from the US government, which began in the Biden administration and have continued under the Trump administration on its ability to sell products into China.
It's a real issue, particularly going forward, and Nvidia is working through those issues. That's their job to do. It's also a really tough balancing act because we really want our technology to lead and to be there. And the more it's limited, the more it encourages internal development in China, like the DeepSeek, where we really aren't sure how much of that is original technology, how much of it is taken from what we're already doing, and then does that allow China to leapfrog by even being more under the counter in terms of getting the spark of that technology and of the development there.
You think the stock is trading at what you call a reasonable multiple if it can continue posting growth numbers like those that are expected today. The multiple I see, the earnings multiple I see on future earnings is 31 times. Talk to us about the multiple on Nvidia.
Well, the market's at 20 times, and you've just shared that, the expectation of the growth rate here has been incredible. So is 30 times expensive for your average stock? Many stocks it is, but we've certainly seen much higher multiples on companies with slower growth rates. And so, of course, Nvidia's valuation only works if we understand what the trajectory continues to look like. Again, saying that will be the focus of earnings today, to try to further understand current product, the development timeline for that product, and the demand they see for it. Okay,
another tech heavyweight you like and you think is also trading at attractive multiples is Alphabet, the parent of Google.
Yeah, I thought I'd talk today about, the two biggie large cap tech stocks. A lot of times we're talking about different areas, and we all know that large cap tech really fueled the market through 23 and 24, and it seems to be the big question mark this year. Now, all these stocks have bounced back from their real lows in early March, but Alphabet, of course, really at a discount to the market. We haven't seen that in years. It's not without reason. There, of course, is some regulatory reason. With economic uncertainty, you wonder about advertising trends that are so key to them. But I do think that this is going to prove to be a rare buying opportunity for the long-term investor.
What do you think of markets at large here, Liz, in terms of how they are negotiating the ever-changing, ever-shifting tariff news?
We've really seen some strength come back to this market, and I think it reflects investor sentiment that the worst of tariff uncertainty is behind us. I'm not sure that's true, but I do think markets are digesting that. We saw that in the consumer confidence number yesterday, a big move off those really unusually low consumer confidence indicators. And so I do think that that means sentiment is starting to change. We're really going to have to be watching the economic data because there is still a lot of unknowns of final tariffs around the world, and that is holding back decision making at the corporate level. And even for a lot of consumers, big purchases continue to be on hold. And when we have corporate decision makers on hold and we have consumers on hold, we are likely to see that in the GDP numbers, whether they're flat or slightly down. I think sentiment tells us looking forward, the view has changed from the likelihood of recession to just a likelihood of slowdown. But we'll have to watch the numbers to see how it comes through.
As a portfolio manager, how much visibility do you think you have on earnings from big U.S. corporations after many of them pulled back their guidance in the most recent reporting quarter?
They've pulled back guidance. So to say we have visibility, nobody does. But as fundamental analysts and active investors, as we are at the Summit Place Financial, we are always looking at the fundamentals. We have an outlook, we have a model we've based that on. So our choices, as we talked about today with Nvidia and Alphabet, are based on what we see in the business trends and what we think those could look like going forward, even with the economic uncertainty out there.
Liz, thank you so much for joining us today. As always, Liz Miller is president and founder at Summit Financial Advisors. Coming up,